Hey guys, how are you? First of all, as Market Sniper channel followers and commentators, thank you so much for your comments. Thank you for your likes. Thank you for the fact that you've subscribed. And thank you so much for all the shares. As you're probably realizing, it's the 31st of December 2019. In fact, it's probably correct to say Australia's already in 2020 and many of the areas to the east of that. I want to just do, I suppose, a short synopsis message, and I did a more explicit one for my premium community, and a lot of people say, oh, we can't afford your premium group, etc., etc. So I'm going to give you even a small summary of something that I said and something that we've identified as an aspect that we're going to be prioritizing and taking further forward and developing in terms of everything we do for trading and investing success for 2020. So if you're sitting here watching this and thinking about what you're going to do different, how you're going to take your life forward financially, and actually this will spill into other things, including health, relationships, and many other things. But I'm initially running at you from the wealth building and prosperity based angle, but beware, there are spillover benefits that are certainly worth having. But anyway, if any of you are there at this space, this is going to be the YouTube for you. First of all, so thank you for all of you as followers, and wishing you a very prosperous, and I like prosperous, I like joyous, and I like healthy new year. So that's the three I'm going for you on the 2020 side. And I want to run through a couple of things super fast that you can just think of conceptually. So this is taking a step back and understanding what the macro game of building wealth, getting your money work for you, aka investment and wealth and trading. It all ties in more broadly. So first of all, when you undertake to say, okay, I'm going to do something of a trading related nature, I want to highlight to many of you that you jump straight into the capstone of that pyramid, which is, you know, the golden apex. Think of your conspiratorial dollar bill and all those things, the floating gold apex of the pyramid, and that is going straight to leverage trading. And I want to warn you, first of all, that you have to earn the right to leverage. You should, in fact, everyone who seeks to become a trader should first be forced to be a 1:1 investor, and should learn patience, should learn restraining his compulsion to trade stroke invest, get in, get out, jumping around, dopamine hunter, should learn to constrain those urges before he gets right to leverage. One of the most destructive things, and one of my most popular video YouTubes was why the 91% fail. It can be 75%, 91%, depending which arena you're in. But actually, in my view, it's access to leverage too soon. And this does great damage to traders. Now, of course, for the facilitators of that leverage, who often palm off A book, B book streams, and for which holding the other side of your trades, just given enough time, will see them get all that you deposit, as if they look at the money in your pocket burning a hole in your pocket as theirs. That's not a bad thing. For you personally as a retail trader, and for me as who wants good things for retail traders, particularly his premium community, but is sharing a couple of thoughts with you now, regardless of whether you've ever graced me with a nickel of your money or attention, my message to you is that's not a good thing. And you need to put in those other layers. You don't just get to the floating capstone. You don't want to hear this. You want that Ferrari trade. You want to just gap up and take it to the next level. I'll do all those good things you say, Francis, but I just want to turn this 10 grand into 50 grand first, or I want to turn this 5 grand into 12, or I want to turn this 1 grand to 5 grand. Then at that point, you know, then I'm going to, you know, put in all these disciplines you're now about to get into. And can I say to you, if you're thinking that right now, you're fooling yourself. You're not going to do it, because when you get to 5, 10 looks better, 12 looks better. When you get to 12, 50 looks better. When you get to 50, you think I've done well so far, why do I stop what I'm doing? 125 looks better. And in actual fact, you'll go all the way up, if you happen to get that far, which is probably exceedingly unlikely, because you're not showing patience and you're not showing the tendency to lay foundations. if you've ever built and developed, which I did do as a property developer, the foundations take forever. It looks like a plot, it looks like a muddy plot with wet concrete, and it just goes on and on and on. Then suddenly when the bricklayers come on, suddenly you start to have walls, and then you have roofs, and then you start to have a shell. But the key thing about building a property is you need it to stay up. You need it to stay up. If you're building a reed hut on the beach, you're going to be able to knock it up and see progress real quick. First hurricane, it's going to get blown over. Not even a hurricane, a big storm can flatten you, and you're going to feel it inside. So if you're here for the long haul, for wealth building, for trading, understand this. You should actually have a savings plan which sees you contribute monthly to, in my opinion, 3 categories, particularly for the reset. So these categories aren't your traditional advisory categories. And let me just tell you, I'm not regulated to give advice, and this doesn't constitute advice. This is my opinion only, and you're happening to listen to it. Gold and silver, precious metals. Crypto to play a role, crypto. And there's a third category, which I call your stuff you portfolio, which is the control structure, oligarchs. And for which I think there will be actually a sell-off at some point. But overall, I think they're going to print more money, and it can still go higher in a blow-off event. So that's the controversial one. It's kind of like a to you, doing the wrong thing and putting your investment in the immoral surveillance state and all the things that I moan about on an ongoing basis. But sometimes being pragmatic and recognizing the game and recognizing to help yourself, you actually have to be inside the tent peeing out rather than outside peeing in for getting those gains. You should put $50, $100 a month that you can afford into 3 1:1. That means no leverage investment vehicles where you build trading stake. So you should actually have 3 levels of leverage. You have no leverage, 1:1, moderate leverage, which would be 3 or 5. If you're on crypto, that would be like a Kraken exchange, for example. And then your high leverage, again on cryptos, for example, that would be BitMEX, which is your very, very hot, and it has to be high certainty trading. And whenever you make profits, you need to tax it into your normal trading account and into your investments accounts, so that you don't get a feeling of flushness and swing the bat again for another home run straight off the center of the bat, which never happens straight after you've had a win. So when you consider those 3 asset categories and those 3 levels of leverage, zero leverage, okay, 1:1, moderate leverage, which if you're on FX, which is slightly less volatile than cryptos, for example, that could be up to 20 on an MT4 platform with XYZ broker. For us, our Scandinavian Capital Markets guys, that the links are in below, for up to 100:1 would then be your super hot leverage when you're really confident about a gold or a silver trade or a dollar weakness trade like we're seeing right now, for example. That's how you do it. So you have a grid of 3 by 3, and you should be saving into your investment, the first column, which is your no leverage column, into each 3 of those categories. Now I had, when I posted this idea, one of the guys, and I said, guys, we need to be doing this. You need to build your foundations at the same time you're trading your skill set for your right to leverage, because you've actually been given leverage before you do it. Before you do it and before you're mature enough to take it. That's the problem. It's kind of like your birthday's in January and it's Christmas and you've been given just a big chunk of presents for the end of the year. You've been given things you shouldn't have got yet ahead of time, and that can hurt you and spoil you. And that's what's happening to a lot of guys. They're getting spoiled. So actually, for those of you thinking you want to be in trading, I'm asking you, how much are you putting away? Are you living within your means? Are you retiring some debt if you have debt? And are you at the same time putting half of what's left of your disposable into a certain amount? Now, when I pitched that in even my premium community, where there's some good guys, most of them got it, but even 1 or 2 of the senior guys said, yeah, but it's kind of, maybe it's different for you. You know, it's fine. Look at you. You've made a bit of money. You know, I'm not there yet, said 1 or 2. And that is absolutely the wrong response. If you're thinking that right now, I will do that when. If you're thinking, if any of you, when you heard that, yeah, good idea, but I'll do that then. First a leverage trade where I make some, then I'll take some of that away. No. The answer is no. You've got to get your principles right. You've got to get your principles and your foundation right. This reminds you of a value of money, and it stops you from over leveraging and doing money management fails, which is the biggest destroyer of traders in your hot leverage or moderate leveraged line. So the first line protects your second and particularly your third, where it's very dangerous. And to start off with, you shouldn't play in the third if you're new. If you're still building your trading career and you're in the beginner category, which actually can run for years, by the way, and I'm not dissing people by trying to juniorify you. I realized that I was a beginner for a lot longer than, in retrospect, than I realized then. You always think you're better than you are. We suffer from overconfidence, a kind of overconfidence syndrome. You have a run where you make a whole bunch of money and you think that's it, you've now escalated out of beginner dim. Actually, until you've had a full suite of experiences of many varieties and blown many accounts up and truly grown and transcended and truly changed behavior personally, that you're actually a different person, you haven't potentially got out of beginner into intermediate. And you need to see another set of changes take place before you transfer, and you can slip back into it. So you never own being an advanced trader. Not I, not anybody else that I know. And it's quite capable. You do a beginner error, you've just merged a little bit of your higher level back to your lower level self. And so you've shown beginner traits again. So I want to warn you about that. You need to put a savings plan on. You need to put a savings plan straight away. Use ETFs. If you want to do the stuff you, military industrial complex, the Google alphabets, all the most loathsomes that are probably going to go higher. Amazon's at 46% of retail. They'll probably break it up when it's at 64%. And even when they break it up, it'll go up in value. Rockefeller's wealth grew when they broke up Standard Oil and they broke it into all the other oil majors that did fake competition, and he unlocked an immense amount of value. So you don't have to sweat Warren's antitrust nonsense. I don't want to go too far into that tangent though. Okay, so what else is there? You've also got to recognize, so you're going to be still doing some trading, but now you're going to be doing some saving too, which reminds you of the value of money and stops you from, you know how hard it is to earn. And let me tell you, if you have next to no money left, you have $20 left, you put $20 into one of them. And the next month you put $20 manually until you can do the minimum amount in all three in 1 month. If the minimum payment they'll accept is $25 a month, you get your costs of living down, you retire sufficient debt so that you have that 25 and you put it into the gold account. You start with gold, precious metals, and you buy silver on Bullion Vault. There's links below. I don't care if you use my links. I'd appreciate it if you support me, but the truth is, I don't mind if you just go, stuff you, I want to do my own. It's not costing you anymore, but do what you need to do. Just start. I'm interested in the outcome here. This is not a use my links video. So do all that. Do all that, get your savings started. Now you're in the trading game. Now here's what I have to say to you about that. There's three arenas for your trading. There's the method and the approach you're taking to how you're selecting trades. There's you, that's your mental state, your biological state, your mental posture in your head, how you respond, your maturity as a trader. And then there's a third one, your implementation, which is going to be your data, your charting, your tools, your broker platform, and where you place your orders. So those three arenas. Now we work on all three in our premium community, and we have things that we do, but you'll have your own, and you're on free view now. You're going to make your decisions. But let me just say one thing. Even if you get given the greatest method to execute, and you don't work on self, you don't own your own outcomes, you're emotional, you attack the market, or you revenge trade when things don't go your way, you will break yourself on the rocks. Like the ocean's waves, you will be smashed on the rocks. And many people think there's a method or there's a game that will outcome you through whatever kind of person you are. You have to evolve. And I get real frustrated because I get lots of guys saying, yeah, you got competitors, and there's guys going out there with all kinds of marketing slants. You know, they go, stuff you, if you're sick and tired of losing, I ain't one of these scam artists. I can tell you I got the best method, and it's going to do 94% and 86% are winners, and it could be a bot or it could be whatever. And if you're sick of the rest and you're trying to, and they've got this bullshit, each takes a certain tone. There's like marketing templates that people utilize and all of this. If it sounds too good to be true, it is. And let me tell you, one system with one person will will deliver a totally different outcome with another person, because one of the variables is you. Yes, you. I'm looking at you. Let's find the camera on my phone. You. I think that's the camera. For some reason, it's at the bottom corner on the selfie stick now. Anyway, so own that aspect of who you are and what you do, and assign to work on yourself. And the words I want to leave you here with on yourself is self-awareness and mindfulness, trader's mindfulness. And you want to become mindful with regards of becoming a peak performer, an elite level performer. In other words, if you're thinking of Usain Bolt and sprinting, he's not drinking the night before he's running the final in the 100-meter sprints, where he's hoping to set a new world record and a gold. You have to decide, I'm a peak performer. That means you need health. That means you need vitality. It means you need energy. You can't be toxic. Recreational drug use the night before, 3 hours sleep and 4 espressos in the morning. It's just not a good. Biology actually dictates far larger than people acknowledge, from microbiome in your gut to all the way through to toxicity, your state of mind. And when you're in an antsy state of mind, you self-actualize your anger and your frustration and your dis-ease. It's a fact. So if you're not calm, impartial, and disciplined, listen to those 3 words. These are the counteracting 3 words to fear, worry, stroke, anxiety. Yes, fear, worry, and anxiety, or uncertainty. Now, you've got to remember that uncertainty is part of this game. Uncertainty is the probability nature of this game. You want, through your programming and your amygdala-based responses, which is fight and flight, you want certainty in a game of probability. That's never going to happen. It's a fantasy. That's what FOMO is. The result of FOMO is waiting for the big expected move, but wanting to know it's definitely happening, and then trying to get in when you assume that it is currently happening because you're now seeing an impulsive move, only to see it fizzle into a spike and you've climbed in at the top. That is your brain and your neuro system trying to rationalize risk away in an uncertain game, to be jumping on the train at the last moment when you're sure the train is going to the destination you think it needs to go, and you'll get pay dirt, to the end of the rainbow where the pot of gold is. And I'm sorry, all of that is fantasy. You've got to have method that takes you away from those responses. We believe we have that, but you still have to do personal work. Method cannot cure you, in essence. And we all come with baggage. I was quite highly emotional. I was prone to excessive risk, lots of things. Know thyself, the journey of self, and know what to manage within yourself. So we all have demons. We all have characteristics, and you can't kill them, you can manage them. You can't kill the monkey. The monkey is your mind, but you can manage it. You can let the monster out of its cage and walk it on a leash, and then once it's walked and exercised, you can put it back in its cage. If you let it run havoc in the kitchen and bouncing off the walls, you're going to have a mess. Okay, so this is things you need to think about if you're really serious about taking yourself to the next game in this trading world. So you have an implementation, you have how, your method, and you have you. And no method will cure you from you. I can't take someone who's highly impulsive, prone to late nights, lots of stimulants, and a schizophrenic type personality that is hot and excitable one moment and then depressed and down the other moment, to being a great trader, even with the best method in the world. It isn't going to happen. Okay. Now, the big meme that we are going to be implementing in our community during the course of this year, and we're looking to be better each year when we go in there, and I've done a far more detailed version of this in a Loom with my guys, but just to give you an idea of what it will be, and you can try do this for yourself. It isn't easy on your own, and discipline is going to be one of those key words that will exist. And this is for your investment as well. This is for your entire personal wealth. So this doesn't just go to your MT4 and your spread bet account and your crypto account type story. This is about your wealth. What do you have? What are you doing with your money? How do you manage your money? And this will take you into, you cannot improve. This is my key theme. If you want it in one sentence, say you're in a hurry and you're done with my video, you just want to go. Here's your answer. You cannot improve that which you can't measure. I'll say it again. You cannot improve that which you're not measuring. In other words, if you have no of any of the following, you are not recording detailed information, time, execution, level, closure, stop loss, closure, take profit, closure, average risk reward calc for every single trade, plus other details and aspects that are beyond the course of this video. On every single thing you do, you are not measuring who you are and what you're actually doing. And if you're not measuring it, you can't focus on it to perform it. Because your subconscious mind is your supercomputer and it's exceedingly powerful. Your amygdala is the fastest fight or flight fantasy, and it's the one that brings you fear and anxiety. Anxiety and worry are future-based fear for future possible losses you may have, and they're all disabling. So you need to get that impartiality, which is bias-free, impartial approach to the market, the calmness, which is the opposite of fearness, and the discipline. And that is going to be exceedingly powerful for you. So now if you're not recording, going back to the measuring, which is so important. Aren't these bird noises amazing? I've got lories, I've got hardy-dar ibises, they're amazing. You're going to hear a few, by the way. Anyway, back to what I'm saying. You record, you capture everything. You capture every trade and you repeat that and you collate and organize that data properly. So you have your capture, the information. It should be in your execution of your blotter wherever you go. You guys can go do this on your own and create your own spreadsheet. You collate it, organize it, columns, grab all the amount. How long are you in trade? What is your average risk reward on the ones that you win? How many are you losing in between those that you're winning? Comments, emotional blog of how you felt because you go through a journey. How are you coping? That will give you strength in future trades when you see you've gone through this kind of angst before. Yeah, and it will create. You should aim to have this day, 31/12/2020, 364 days from today, you should aim to have a book, a physical book. It could be online and in Excel sheets that have all your charts, your Excel sheets, and your book of what you're going to have done for this year, what you have done for this year, so that you can post-mortemize at the end of each period, which would be at the end of a week, end of a month, quarterly potentially, half yearly, and then at the end of the year. And you can look at what did you do, how have you done, see it dispassionately after the energy of the loss is gone. Look at it a couple of weeks later. Maybe it hurt. Maybe there was a money management loss in there that shouldn't happen. Why did this happen? What with the chart, how it's moved subsequently, now that I've just switched off, left it, and come back to look at it later, what did it end up doing, and how could I have possibly seen the fact that it was going to do that I missed in the original view? Was I overly bull biased? Was I over this? Then you can start making adjustments to that which you do. So you make behavioral-based adjustments. You might make platform-based adjustments. You're being slipped too much by your broker, or you're always chasing in when it's highly hypey and FOMO season for the 91%. You're not early enough. You seek a remedy. You add the remedy and you implement it, and it goes back into your 3 arenas. So now in terms of whatever method you're using, implement, adjust, and now you fix. So feedback mechanism, more data created, more post-mortem analysis, data captured, collated, organized, more analysis and post-mortem, feedback, any adjustments, anything you recognize that you did in your you game in the 3 arenas. Remember, you'll have a method, you'll have your arena. Your method might be missing certain aspects, how to deal with certain situations. Create that so that there's no gaps in it, and then implement again, create new data, test and improve. This is the scientific way that you move forward sensibly. And if I ask how many traders are watching this video right now, how many of you can look me into the eyes, bottom right corner camera, can say that you're actively and effectively doing all of that to a high enough level? I'm missing on many occasions big chunks of this, and I'm recommitting myself to my basics and the journalizing, and I'm recommitting my entire community, and we're putting resources towards that. Go do it yourself, or go invest in a group of people that will do it, that you can work in conjunction with. This on the trading level, and the meme should be a fear-free trading, because you will have done your money management and you'll have a money management sheet for every trade. By the way, all this extra, what you're thinking of as admin and hassle, is going to reduce your number of trades. You're only going to do it on your best trades where there's in your mind high probability and high certainty. You're going to destroy all the shitty little in-betweener impulse of what the hell, let's have a go trades that nibble and decompound, in other words, reverse compound the gains that you could be making on your best trades. Did a YouTube a while ago, and never enter on a market order again. So that means pending only. So you're getting to the trade before the break and you're setting a tripwire, and do all of these administrative things that I think, and actually they're fun, they're not admin, they're your book. You're writing your book of life. And we always talk not only about, when we talk about money management, the rewards, how much upside, will there be overperformance? We have a whole method that details with all of this. So we're talking about the juice as well as just the squeeze. Is it worth it? You know, the accounting sense. And remember, with each trade, it's like a business plan. Prepare your documents, prepare your charts, make your case, go up into your higher mind instead of your amygdala impulsive response, and talk to the board of directors up here and make the case in front of the CFO, the CEO and the CTO as to why this particular trade is good and every aspect that you've done. Do you have a checklist that involves every aspect? We do, which is very detailed on 360-degree analysis and a whole bunch of things. Beautiful animals here. And it's going to be the difference between self-actualizing and just having a go. If you're here to just have a go in your trading and you're hoping that you'll spin the bottle of the roulette wheel and smack home on a Ferrari trade, which is going to take you to the moon, and then you don't have to hassle again, and then you're going to go surf for life or do something else, I think you're in a fantasy. We dispel fantasies. Nothing easy comes to people that don't work hard at it. Nothing easy comes to people that don't work hard at it. If you want a nice life, if you want to live in a great gated community with amazing jungle, monkeys and deer, and a sight of the sea, where you chortle around in golf carts, there's more pools and bars and hotels and restaurants and amazing uninhabited beaches to enjoy your life in, you've got to work and you've got to earn and you've got to do something spectacular with yourself. And trading can be it. But don't assume that you're going to hit a hole in one very early on in your career and that'll be your story and you're kind of lucky. Even if you do, you'll try repeat it to get to the next level and eventually you'll blow up. Without discipline, calmness, personal development, and developing impartiality, removing your bull biases, removing your biases against the dollar, for the dollar, against gold, for gold, etc., you're not going to move forward. If any of this makes resonance for you and you've decided, I want to be better, recognize you may need to make an investment, not an expenditure investment for which you should seek to get a return on that investment. If you think I'm going to save investing and I'm just a seat of the pants of it, I worry for your potential outcomes, but it's a free world and we need liquidity providers on the other side of our trades. So watch out. Okay, finally, it's 2020. If this resonates, it resonates. If it doesn't, thank you anyway for being a subscriber. Thank you for liking and sharing. Grab the mini-series if you haven't below. Book a call if you want to talk more. Have an amazing, prosperous, joyous, and disciplined, and healthy as well, 2020 going ahead. And thank you for being on the channel. Bye-bye, guys, and see you later.